program. All right, we're moving on now. The Naira suffered a significant depreciation on the Nigeria Autonomous Foreign Exchange Market window, closing at 1,561 Naira 98 kobo to a dollar on Wednesday, July 10th, 2024. This is according to data from the FMDQ Securities Exchange. The Naira depreciated by 2% from 1,532 Naira 58 kobo recorded the previous day. This rate is the first time since March this year that the Naira depreciated below 1,500 Naira. And other issues, we also expect the United States to come up with interest rate figures. If that is not even out already, we're trying to confirm that. And other issues surrounding the economy. I'm being joined by a portfolio manager with AfriInvest West Africa, Mr. Babajide Atolagbe, to break all of this down. Good afternoon, Mr. Atolagbe, and thank you for your time.
Good afternoon.
Yes, after a bit of stability in the foreign exchange market, which many have actually commended, we now see that one way or the other, the Naira is receiving this bashing slightly, and it's moving again towards 1,600, 1,550 Naira in whatever way you want to look at it. How does this come to you? What do you make of it?
Yeah, thank you, Dolu. So the price development that we see in the FX markets currently is somewhat consistent with our expectation, right? And the reason why I'm saying this is because this is the closest we have come as a country in the last 10 years to having a free market, right? Whereby we have willing buyers and then we have willing sellers, and prices are largely driven by supply demand dynamics. Basically, prices are driven by the fundamentals of the market. However, there seems to be some gray area, right? And the gray area comes from the fact that there is a level of information, asymmetry in the market, right? In terms of information asymmetry, right, we constantly see the state of the FX reserve as published by the CBN from time to time, and that gives us a good sense of the dollar asset that we control as a country. But on the flip side, we do not timely have a view of what the liabilities of the CBN are in foreign currency. And when you have when the market is blindsided like that, we tend to see a pricing that doesn't reflect the true state of the CBN's ability to supply the market, and this makes it very, very difficult to understand some of the factors that are driving prices in the FX market. But I must say that the development we've seen lately is a function of of market forces. It suggests that the demand in the NAFEM space has been elevated, and the CBN and other sellers in that space have not sufficiently met with those demands. And if we are to break it a little further in terms of why the CBN is not able to to meet those demands, I think we need to start asking questions about what's happening to the state of the reserve. And on answering what's happening to the reserve, we've seen a decent accretion to the reserve in recent weeks, right? And the reserve currently sits about $35 billion, which is the highest level we've seen since President Tinubu came into government. And the reasons are not necessarily far-fetched. We believe that the capital importation numbers have clearly fueled the accretion we've seen in the reserves. Crude oil sales have not been really exciting. Production levels are still relatively low, even though the oil prices are seated around $82 per barrel. We have no sight on what remittances look like, and the CBN and the government has not necessarily raised monies from the Eurobond market. So we think that the capital importation, flows from capital importation, particularly foreign portfolio investment, has been the reason for the accretion in reserve. So back to my earlier, assertion that yes, we see the CBN getting flows, and the reserve is looking healthy, but we see a different picture in the price of the currency as it continues to depreciate. So what that suggests to us is that yes, the CBN may be getting some flows, but they may have some, compelling liabilities that has actually limited their ability to service the market and to keep the market at a much more stable level. And I must also end that this is essentially what we should see, as the prices will reflect the exact position of the market. It shows the dynamic of the market in terms of demand and supply.
Brilliant. Treasury bill rate is also above 21% on the longest end. This seems to be very attractive at this time. Many would like to get into this space. What does that mean for the entire market space?
Yeah, I mean, this is also not new. I mean, since the current CBN administration came on board, they have disclosed their appetite, their disposition to raising interest rates, first to reduce money, in circulation, and also to attract, foreign investors and to make Naira assets, much more attractive to, both domestic and foreign investors. And as a result, they have raised, interest rates nothing less than 2 times in the last MPC meeting. Rates were around 18%, when the CBN, administration came on board. And as we speak, it's in the region of 26%. That is a clear testament to how aggressive they are in terms of raising interest rates. And the money market is a very, very, efficient market. It tracks the activities of the central bank. And we have seen rates in that hand also, jump as well. Rates have moved from as high as, from as low as 18-19% towards the early part of this year to around 20-21% in yield, right, in discount rate. And at the last auction that was, concluded yesterday, rate closed at 21.24%. So it's really high. While a lot of analysts and a lot of businesses have complained about the impact of this rate on Nigeria's output and the impact it has on business and profitability, the CBN still maintains a stand and point on keeping rates elevated, primarily to keep the Naira stable, which is also, somewhat linked to what we had discussed earlier in the FX market. Because if you look at if you decongest the capital importation figures we've seen, you will see that foreign portfolio investment, account for a significant chunk of most of the monies that came into Nigeria in the first, 6 months of the year. And if you also decompose, the foreign portfolio investment numbers, you find out that a significant chunk of them has been in the money market, the treasury bills and the OMO space. So the strategy seems to be working for the central bank as they are getting flows. However, asset holders as well as businesses who are facing the harsh realities of high interest rates on the other end are not particularly excited about the situation. And in terms of giving an outlook, we think that the central bank is not likely to change their disposition in the short term. Rates are likely to remain elevated. Also, if you look at what's happening outside the country, most central banks in the world are still, maintaining a somewhat, wait and see approach. So the CBN will not be in a hurry to, cut interest rates in the short term, as we see, yes.
We also expect the inflation rate from the United States. Do we have any release at the moment? I think we're still... but my question really would be, what do you think what would be the implication of this? Now on the financial markets, of course, the global economy, and of course, on monetary policy?
Well, like I correctly mentioned, the inflation number for the month of June in the US was released a couple of minutes ago, right? And it printed at 3%. The expectation was actually 3.1%. A 3% figure simply shows that the inflation reality in the US is reducing faster than what market is expecting. So to give some context to it, remember that COVID-19, Russia, Ukraine, and all of that skyrocketed inflation globally, and central banks have continued to address that mismatch by cutting by hiking interest rate. I beg your pardon. And if you notice as well, inflation has been on a downtrend since 2023, May 2023. I think the latest number we've seen only confirms the position that inflation that we experienced in 2023 is starting to get out of the picture entirely. Because if you look at the global markets, the global monetary policy space, and even global growth in 2023, it was predominantly dictated by the events of inflation, right? But now that inflation is beginning to moderate, it simply means that first, in terms of global growth, we might see some reduction in global growth because people are not buying as much as they are buying, people are not consuming as much as they are consuming. Also, in terms of monetary policy, the central banks across the world, they want inflation to come down to 2% levels, and as we near 2% levels, it only brings back the confidence that they are likely to start reducing interest rates in the near term. And in terms of financial market, right? Inflation, higher interest rate has held the market at ransom for too long, right? And as we see this inflation now moderating to the target levels of 2%, we're likely to see asset prices respond positively. For Nigeria, right? What this means for us is that as asset prices begin to rise in the developed markets and yields fall correspondingly, sooner or later the naira asset may begin to be attractive again to foreign investors, given the fact that our interest rates and our yields on our fixed income instrument are still relatively high. So it's a win-win for Nigeria, and it's something that we should our central bank should make sure that the country is positioned to enjoy the possible spillover of capital from the developed market.
Well, it's a good way to leave it. Interesting conversation. I've been speaking to portfolio manager with AfriInvest West Africa, Mr. Babajide Atolagbe, breaking down all of this very interesting issues. Thank you so much. Do enjoy the rest of your day.
Thank you. Take care.
All right, they're interesting. Really, I must say, looking at what the U.S. inflation figures and how it affects the global market and what to expect even for us in Nigeria. And now let's move to Abu.